Hi guys, I am Mr. JJ. Welcome to my channel. Very often we hear about the terms, stock market, Nifty, Sensex, etc. Have you ever thought about what they are? Do you think they are only for professionals and trained traders? Actually, they are pretty simple and anyone can start trading with a few simple steps. Firstly, let us see what a stock market is. To make it very simple, it is a place where you can buy shares of companies. Very simple. Okay. How does it work then? Right, imagine if a popcorn company needs to come to the market. Initially, the company owner advertises his unique idea to attract potential investors. If they like it, they will sponsor the company's initial public offering, or otherwise called IPO. This is a process of offering shares of a private company to the public. This includes the company into the stock market where people can buy fractions of the company. They might decide to sell only a certain percentage of shares, or otherwise called stocks. Say they sold 40% shares. Imagine they issued 1,000 shares for $5 each. The company gets $5,000 when people buy all the shares. That money will be used to establish the business. The owner may decide to set up a shop for popcorn. People buy popcorn from the shop and that generates profit. As a result, the value of the company increases. The price of the share increases too. The growth of the company attracts more investors and they buy stocks. The price of the stock increases as the demand increase. Again, that brings more money into the company. This forms a chain, and over time, the wealth of both the business and the investors increases. On the other hand, if the shop turns out to be in loss, the reverse could happen. A loss will reduce the value of the company and the share. If investors think the value is going to drop further, they may sell it. As stocks are being sold, demand plunges and causes loss to the remaining shareholders. The success of a company depends on several factors such as wages of the employees, the price of raw materials, changes in technology, government regulations or new laws, rumors, etc. Any variations on these factors cause ups and downs in the stock price. For example, an increase in the price of raw materials will force the company to charge more for each tub of popcorn. This may turn away customers and cause a loss for the business. Therefore, the value of stocks diminishes. Well, that is the principle of how the stock market works. Now, shall we dive into the history and facts regarding the stock market? Stock market was introduced by the Dutch East India Company in 1600s. They traded goods between countries. Their shares were listed on the Amsterdam Stock Exchange. Early stocks were handwritten on sheets of paper, and investors traded these stocks with other investors in coffee shops. The London Stock Exchange was the main stock market for Europe, while the New York Stock Exchange was the main exchange for America and the world. Today, most nations in the world have stock markets. There are 60 major stock exchanges in the world. The total stock market value of all stocks worldwide is around US $70.75 trillion. The largest stock exchange in the world is the USA, followed by Japan and the United Kingdom. With more people turning into technology, anyone can buy stocks within seconds via stock brokerages or electronic trading platforms. Every day, trillions of dollars are traded on stock markets around the world. I hope you enjoyed the video. I will explain more in the coming videos. Leave your comments below. Thank you.